What you're about to see is a video snippet from inside the boiler room. Every single morning before the open of the US stock markets, I analyze dozens of stocks and then decide on the trades that we're going to look at for that day with dozens of traders. We all get together, execute trades, chat some, and make some money together on a Zoom conference call. Go to thepatterntrader.com/club to find out more. It's really important to look at all of these time frames because you can see how the NASDAQ, it suckers you in here, but you're right against this reversal low. And now, if you get two reversals, now it just sets up the opportunity for really a massive rally. If at the end of the month, we now look like this. Now you got two reversals here. Now you got this little base down here, and now it opens up for what could be a rally. So these markets shift gears very, very quickly, but they do leave clues, and it's very dangerous to start shorting right there in the expectation that you're just going to take out this reversal low. There's times to do things and then times to just back away. So, you can see we're in this tight little channel here, and it just feels like we go back to 290. So it's going to be kind of interesting to see how we kind of put Humpty Dumpty back together again. But this is a, kind of a formidable area. And if we end up with a reversal by the end of the month, it could be a bit of a game changer. So, we have to take one thing at a time. But this is just a very dangerous area in here. Very dangerous. These are levels where, you're in between support and resistance, and it becomes pretty random. And you can see, it swings down yesterday and up huge today. So, there are certain times where the market kind of it releases energy so that it can come away. And then when it gets into these kind of things, it becomes very arbitrary. And I think I've been saying that for, a few weeks now. This is just a very dangerous random area, flip of a coin. But in a way, we did set this little bottom, and now it's going to, be up here. And now you're going to have the appearance of a bottom, which can then set forth another rally. And, I think that's basically what it looks like. My gut was that we have seen the lows for the year. Somehow these things were going to, so here's the NASDAQ. And so it just feels like we're coming back to 300. And then, you can short for the world there. So we're just right in the middle of this channel, and it becomes pretty random. But here again, it was a little bottom, not conventional, but this is what prices do. Very difficult to short against something and then say, okay, I'm gonna, get through all of this crap like that. You got seasonal tendencies and all kinds of things happening, and this is what happens. Now it's, I think it's going to be a ripper of a market to 300. The dollar is the key to the whole deal. And with the dollar topping out, now this gives room for the stock market to start going higher. It looks like we could have a substantial top on the dollar. This is only the daily, but we're starting to see this triple top. We broke through the neckline now, and now this gives space for the S&P to rally. So, yeah, now it's a short covering, a short covering just ripper. And these short covering rallies are just unmerciful. So this is the dollar on the monthly. And you can see we started stalling out. We made a new high. The month following, we didn't make a new high. Now this month we're, stalling. So whenever you kind of go up with such velocity and then you start stalling, it can just turn very, very quickly. So, is this the obituary of the dollar? You never know. You might, you could be looking at the end of it. So you had this breakout, and now it sets up this condition of this bull trap that anybody who chased this breakout onwards could be trapped up there. And when traps turn, they turn very quickly. So, this is setting up the stage where, this is stalling. And this is the key to the whole ball game. Treasuries, the stock market. If the dollar starts becoming a little weaker, these other assets will just rally. So here's Tesla. What was yesterday's high? Yesterday's high was 197. So this is where I just start visualizing. I start just playing around with certain scenarios, trying to see, just price. So what are we trading at? 192 now. So we're right up here. I mean, and then, I say, does this look reasonable? I mean, look, anything's possible. These are areas or markets now where, anything's possible. So this was, maybe a bear trap under here. And now they're going to squeeze the life out of the shorts and then go back down. So this is not a market to fool around in. I mean, it's going to open at 192. And then you say, well, is it really? So yesterday you had what I call an outside key reversal, where you made a new high on the day before and a new low. So now the question is, are you going to make, are you going to take that out? Are you going to take that high out? It's very possible you could. Very possible. So look, this is, there are times when the market just becomes random. I like getting in when I see these key reversals and I can get in there. Or I see this key reversal and I get in there. Once the thing starts getting going, then it becomes a very random affair as to how this is going to go. And then you just have to wait until, like Moderna, you have to just wait for the market to tell you where it's going to stop. And the market will. This thing went up and then it gave you an area where it told you where it had stopped. Now it's random. Resistance is there, the support's there, and it could just do this. And it's a flip of a coin of what it's going to do, like this. So there are times where, you can tee up your trades, and then there are times where, it's just a random event. And you have to wait till the market gives you more information where you can kind of get back on that horse again. But, this is where things get difficult. And this is where you can't see it on this daily chart. So you got to go the weekly or the monthly, because this is where the historical support is, right at this 180. And the markets just don't slice through these areas. It's just amazing. They don't go through like butter. That's why, you have to be cognizant. And that's why I encourage you to look at the larger time frames, because on a 5-minute chart or even on a daily chart, we can't see that this is where there's, a major level of accumulation or support. So when we come back here, this is not the time to be fooling around with this, especially after you've come straight from 240 to 180. So like it's like, I always wait for the distribution of energy. So if you come straight down, you don't want to get short right there. You want to wait for the bounce and then go again. Now you had another distribution of energy. Now you want to wait for the bounce and then definitely short it. I mean, whatever rallies we get, jump all over. I mean, if you see this thing back to, so what is this area? This is probably about, so that is 210. So this thing ever gets to 215, I would jump all over it. Hey, if you would like to trade alongside me every day and join our most prestigious program, then head over to thepatterntrader.com/club for more information.